The fundamental analysis is like the heartbeat of the financial world. So it's a powerful tool that is used by investors to assess the true value of currency and then of the company stocks. That is for those that trade stock, not just in the currency market. You can use fundamental analysis to assess the value of a particular company before you buy into their stock, their financial health, and then you can also use it to measure their growth prospects, as well as you can use it to measure the health of a particular country. That is the financial health of a particular country. Maybe the particular country is growing economy wise or it's declining in the economy. So welcome to Ambafx YouTube channel. Today we are diving deep into the world of finance and investing to explore the fundamental analysis and to know how to read the forexfactory.com for potential trading opportunity. In this video, we will demystify the fundamental analysis. We'll break it down into complex concepts, into simple and then the actionable steps. Whether you're a beginner looking to start your trading journey, or you are a professional forex trader or do have little or no knowledge in fundamental analysis. So in this video, we'll provide you with the fundamental knowledge you need to be able to relate the news and the technical together. So we'll dissect the fundamental reports, how you can read the report, and then what each of these reports means. So don't forget to hit the subscribe button and then turn on the notification bells so you never miss out on our valuable content. So let's get started. So welcome back. So when we are talking about the fundamental, we are talking about the news, and what are the news that make the particular economy of a country decrease or that actually increase the health of a particular country's economy. So number one thing we have is we have the geopolitical tension, we have the macroeconomy, and we have the microeconomy. So in all, we are going to explain it one by one. So we have the CPI, we have the PPI, we have the interest rate, we have the GDP, we have the unemployment rate. As you all know, if I want to study weekly forex forecast, I usually use DSY to measure what we are going to do in the weekly forex forecast. And then the US has the biggest impact on the financial market. That's the truth. The truth about it is that the US have the biggest impact in the financial market. They have the biggest economy in the world, followed by China, and then lately India is has entered the ratio. The best way to make money in the financial market is by economic divergence. What does this mean? It means that if you think the economy of a particular country will be good and you trade that pair, let's say this is US dollar and pound, that's GBP USD. You think the economy of the British will be good for a particular time, and you think that the economy of US dollar will not be doing well for a particular time. You can trade it together by buying GBP USD. It means that you are buying the share in GBP in pounds economy, that is in Great Britain's economy. So that is how you make money in the forex market. You incorporate the fundamentals into the technical. So after getting the ratio that okay, this particular economy will be good and this particular economy will be bad, so that is where the technical analysis comes in. That's when you will now use the technical analysis to enter your position. You find entry using the technical analysis. You use the fundamental analysis to see the big picture of what's going to happen in the economy, and then use the technical economy for your entry to look for entry. So the first one we want to check is the CPI. What does CPI mean? The CPI is the consumer price index. So it includes, and then it indicates how much people are spending on certain goods and services in the economy. That is the CPI for you. That is the consumer price index. It indicates how much people are spending on a certain goods in the economy. So if the CPI increase, it means that people are spending more on goods in the economy. And then if the CPI decrease, it means that not many people have money to spend in that particular economy. So it is inflation measuring. So they use CPI to measure inflation. After the CPI, we have PPI. We use PPI to measure inflation. So PPI is the price of goods at a producer level before the goods reach the consumer. That is the PPI. So PPI and CPI, they are inflation measure news or inflation measure reports. Yeah, that is the CPI and the PPI. If the CPI and the PPI increase, the inflation of that particular country will increase, and if they both decrease, the inflation of that particular country will decrease. So the next one we'll talk about is the interest rate. What are the interest rates? The central banks control the interest rate. If the central bank decide to cut the interest rate, it means that they want to potentially weaken the economy and also want to weaken the currency so as to produce inflation below the target, as well as to stimulate the economic cheap borrowing so that many people will be able to borrow money. If the interest rate decreases, if they cut the interest rate, many people will be able to borrow money from central bank with low interest, and then the currency will be devalued a little bit, will be weakened a little bit. But if they decide to hike the interest rate, there will be less borrowing, but they are also trying to strengthen the economy of that particular country. So let's now relate the interest rates and the inflation together, which means that if the inflation is moving high, the interest rate should also move high to meet the inflation targets. The next one is the GDP. The GDP indicates the total market values of goods and services produced in the country. So that's GDP. It is the total market value of goods and services in a country throughout a year. The country usually measure GDP monthly and yearly, but the significant reports are dropped yearly. That is how they measure the economy of a country. You measure the economy of a country by their GDP. What is the GDP of that country? That is how you know maybe the country has a growing economy or a slowing down economy. So when the GDP numbers increase, it means that that country economy is very strong. And then when the GDP numbers decrease, when we have a declining GDP, it means that the economy of that country is weak. So GDP is a macroeconomy and it is a high impact news, which if it drop, you have a high volatility coming into the market because the market participants will be willing to see the GDP numbers and will be willing to take actions due to that report. And we have the geopolitical event too. So the value of a currency is connected to the national and then the international geopolitical event, either the election, maybe the protest, maybe the geopolitical tension. It can be war, it can be changing in government, it can be trade policy in a region, it can be anything that cause widespread of instability in that particular country. This can determine the economy of that particular country too. The political unrest or war, especially the Russia and Ukraine war, can actually lead to the decline of that particular country economy or any other country that depend on that country for trade. The war might not affect the country alone. The geopolitical tension might not affect the country alone, but there are some countries that depend on other country for survival to trade. For example, if there is a geopolitical tension in China, Australia will be affected and somehow New Zealand will be affected because they are trade partners. They are very, very close trade partners. So that is how it is. So as a forex trader, we follow all the data released and the news announcements so as to get the bigger picture of what is going on in an economy, and then use it to do what? To relate to your technical, and use your technical to do what? To enter your trade. The next thing we want to talk about is the unemployment news and the job data. So the job data too shows the labor force of a particular country. How many people are working, how many people are contributing to the economy in terms of job, in terms or how many people are filing for the unemployment benefit in a well-developed countries. How many people are filing for the unemployment benefit? How many people are actually employed? So these two determines the growth of a particular country's economy. That is, if the unemployment rate increase, it means that that country is not doing well at a particular time because the number of people that are unemployed increased. But if the number of people that are unemployed decreased, it means that the country has done well to create work and to create labor force for the citizens of a particular country, and then which in turn develop that economy. So when you get all this data, when you get all these reports, how do you incorporate it into your trading? You will find a particular currency that have a stronger economic backup. Let's say US, maybe they have at that particular time they have a very strong economic backup, and you want to pair it with, let's say, Australian dollar. Maybe Australian dollar has a weaker economic at that particular time. Maybe they just released their GDP and it's low in number. Maybe they released their interest rates, probably they cut it. So you incorporate it together and go to your technical analysis and find your entry via your technical analysis chart. So you get the bigger picture from the economic activities, from the fundamental, and incorporate it to the technical. So the next video will tell you and will show you how to read the forexfactory.com. I don't want this video to get longer than expected. So the next video I will show you how to read the forexfactory.com, how to know this particular news is bad, how to know this particular news is good, how to know maybe this particular currency will be affected, how to know the particular news that will be volatile, particular news that will move the market. So if you like this and if you find this useful, click on the notification bell in case I drop the next video so that you can be notified. Subscribe and then share this video to your loved one. This is Ambafx. Don't forget to trade safely.